Imagine a business discovering an asset on its balance sheet worth tens or hundreds of thousands of dollars, but instead of collecting it, they simply throw it in the garbage. It sounds impossible, yet thousands of companies do something similar every single year. They walk away from corporate-owned life insurance policies, specifically key person policies, by letting them lapse or surrendering them back to the insurance carrier for a fraction of their true market value. If your business holds a permanent life insurance policy on a key executive, founder, or partner who is no longer with the company, you are likely sitting on a hidden corporate asset. Today, we are going to look at how a corporate life settlement can transform an unneeded insurance liability into an immediate, high-value cash injection for your business. Key Man Life Insurance is a vital protection vehicle designed to insulate a company from the operational shock of losing an indispensable asset. But business landscapes change rapidly. What happens when that insurance is no longer needed? There are two primary scenarios where this happens. First, the key executive departs or retires. The executive leaves the company or transitions out of leadership, leaving the corporation with no need to continue funding the premiums. Second, the business is sold or liquidated. During a corporate merger, acquisition, or restructuring, existing business-owned life insurance policies are frequently left behind or flagged as unnecessary administrative overhead. In the past, CFOs and business owners thought they had only two choices: either keep paying the costly premiums to preserve the death benefit, or surrender the policy to the insurance company for its baseline cash surrender value. But today, there is a far more lucrative third option: the secondary market for life insurance. A life settlement is the legally regulated sale of an existing life insurance policy to an institutional buyer for an immediate lump sum cash payout. The transaction is simple: the institutional buyer pays the business a lump sum that is significantly higher than the policy's cash surrender value. In exchange, the buyer takes over ownership of the asset, assumes 100% of all future premium obligations, and ultimately collects the death benefit when the insured passes away. Recent industry data from the Life Insurance Settlement Association show that policyholders who sell their policies on the secondary market receive an average of 4 to 8 times more cash than the insurance company offers for a standard surrender. It is a powerful way for businesses to extract the true fair market value of their corporate property rather than accepting a lowball settlement from the carrier. Before looking at the specific business benefits, we must outline the foundational rules for qualification. To be viable for an institutional life settlement, the transaction must meet a few basic senior settlement criteria. Age standard: the insured executive or former key man must typically be age 70 or older. Policy size: the policy must have a face value of $100,000 or more. Policy type: the contract should generally be a permanent structure, such as universal life or whole life. However, certain term life policies can also qualify if they have a valid conversion rider that allows them to be converted to a permanent product. If your unneeded corporate policy matches these guidelines, let's look at the financial advantages a life settlement delivers across each specific business scenario. Let's break down the advantages scenario by scenario. Scenario A: the key man has left the company or retired. If the insured executive has retired or transitioned out of the firm, maintaining the policy is nothing but an ongoing drain on corporate cash flow. The benefit: a life settlement instantly eliminates the burden of paying expensive annual premiums. Furthermore, the substantial cash premium realized above the carrier's surrender value can be used to fund the executive's retirement package, grease the wheels for a partner buyout, or offset the recruitment and training costs of a replacement leader. Scenario B: the business is being sold or liquidated. During a merger, acquisition, or business wind down, corporate-owned life insurance policies are often overlooked assets. The benefit: instead of allowing the policy to lapse at zero value during liquidation, a life settlement enables departing owners to harvest immediate, maximum liquidity from the secondary market. This windfall can increase the final valuation of the company's distributable cash assets, returning more capital to stakeholders or shareholders. Scenario C: any other reason the policy is no longer needed. Perhaps your corporate debt has been paid off, your buy-sell agreement has been restructured, or your corporate treasury needs immediate capital optimization. The benefit: by liquidating the policy for its true fair market value, the business captures immediate, unrestricted capital. This money can be instantly reinvested into your core business operations, used to secure high-yield corporate assets, or deployed to pay down active liabilities, achieving a far more efficient allocation of corporate liquidity than a low carrier payout. Your company would never sell a piece of commercial real estate or corporate equipment for a fraction of its market value just because you no longer need it. Your corporate life insurance policy is no different. It is a tangible corporate asset that belongs on the open market. If you are holding an unneeded key person policy with a face value of $100,000 or more, and the insured is age 70 or older, do not surrender it back to the carrier without a financial review. Work with an independent financial advisor and a licensed life settlement company to run a complimentary valuation. Discover what your policy is truly worth on the secondary market, and unlock the hidden cash waiting on your balance sheet today. We have a short assessment that allows you to determine if a policy might qualify for a life settlement. It takes less than 2 minutes, is completely free, and you will get the results immediately. You can access it by clicking on the link in the description. If you found this strategic breakdown valuable, you may also be interested in our video, What is a Life Settlement?, which explains the qualifications that make a good offer possible and the mechanics behind life settlements. Just click the video thumbnail above.